Thank you so much for joining us today, Rakesh. Let's start off with the top line, looking at a group turnover of 2.1 billion shillings. We've seen an increase for the first half of the year, around 300 million shillings. That's, of course, compared to last year, June. If you could just break down the numbers for us and take a look at the key revenue generators for this period.
Yeah, I think overall what we've been trying to focus on our innovations and trying to bring a lot of new products from the worldwide. Number one. Number two, our key strategies to push the new product sales in the market. If you look into the last particular 6 months, we could able to generate extra 10% from a new product which we have launched in last 1 year. So new products innovations have been really helping to grow this turnover, and plus we could able to increase our market shares in the premium market after launching a Teflon range of products, which also pushes to improve our sales in premium sectors. Premium products has market share we gained by 5% because of a new technology of Teflon from DuPont.
So let's take a look at that DuPont partnership, because of that, of course, with DuPont Chemicals in the United States. Is that a partnership that you're looking to still leverage off and still grow in the region, and you see more opportunities for introducing more products to the market?
Yeah, of course, because I think the Kenyan markets have been growing and maturing, and the people are looking for quality brands. And we would like to extend all our Teflon range to more products. Like next 2 months, we've been launching a full range of exterior finish with a Teflon. And coming years, maybe more wooden finishes would like to launch to get the benefit of this technology and to expand our premium sales and our market share.
Crete, South Africa, is of course a company that you have a 5-year partnership with, and that was launched in May. Just tell us how that is progressing. Are you able to look at the plan going forward in terms of how you expect to leverage off their expertise here in South Africa?
Yeah, of course, because we know that South African markets have a better technology and better quality products than the Kenya, and Kenya market has been growing day by day. So what we've been looking for, South African is on our arm length, so it's easy for us to get the benefit from South Africa, because our culture is the same, it's easy to reach, and they understand the market very well, because whenever we have a partnership with South African business partners, they can understand Kenyan market much better than any European and Americans. And it's really helped us to grow in a bigger way, and we can able to make a big impact in the market with those product range.
Let's talk about the cost aspect of the business, because you said that net margins improved to 5.2%. Are you looking at being able to improve margins further, perhaps with the expertise and cost understandings of partners like Crete and DuPont on board?
I think what we've been trying to do, improve our margin with not our major with the business partner, but what we do with our own internal efficiencies, and probably there's a major reason that Kenyan shillings was stable in the last 6 months, and then certain raw material prices like titanium dioxide also has been come down drastically by 10 to 15% this year. So those all, in spite of very high interest rate, the interest rate has gone up by 20 to 23%. So we could able to get some cushion from no interest. From the Kenya shillings was stable, and from our margins improved because of our internal efficiencies, and could able to bring down our inventory costs, as well as able to control our inventories and stock controls and debtor management.
In terms of the second half of the year, you've talked, as you say, about product innovations. You've talked about expanding into the East African region and leveraging off partnerships that you currently have. What can we expect in H2? Are you looking to open more depots? You opened up in Tanzania. Give us an idea of what the second half of the year holds for you.
I think second half we've been focusing on two major markets. That one is Kenya. We are looking for Tanzania to open. We just opened a depot in Arusha. Then I think once this will settle down, we will be looking for another expansion, depot operations in Monza, and we are looking for buying a land in Tanzania to start manufacturing in the next 1 year. Then we are looking for opening a depot in Rwanda operations, because that's one of the market is also been growing very fast. There's a lot of construction booms. Then we have been probably looking for Sudan to start our distribution point there. If the currency issues and limitations problems has been resolved in Sudan, so we've been eyeing also to have a depot in Sudan, and maybe we're looking for something to do in DRC from Tanzania.
Rakesh, thank you so much for joining us today. Rakesh Rao, the CEO of Crown Kenya.